Welcome to Joe's Happy Hour, a show about markets and life hosted by Joe Fahmy. This podcast is for informational and entertainment purposes only and should not be regarded as personalized investment advice or relied upon for any investment decisions. Joe Fahmy is an employee of Zor Capital, and he and his clients may maintain positions in the securities discussed in this podcast. All opinions expressed by Joe are solely his own and do not reflect the opinions of Zor Capital. The views expressed by guests are their own, and their appearance on this program does not imply an endorsement of them or any entity they represent. Thank you and enjoy the show.
Sam Rowe, welcome.
Thanks for having me.
Thanks for being here. I appreciate you flying all the way in from New York just for my podcast.
Just for this.
Quick introduction, founder and creator of TKer, spelled TKer. People can find you at tker.co.
Yep.
And it's a newsletter about how the stock market usually goes up.
Yeah.
We've known each other for a while. You've also worked as managing editor at Yahoo Finance. You've worked Business Insider, affiliated, just a lot of different things, Forbes and so forth. You're probably, I'm going to guess you're the only guest I will ever have on that has the same major that I had, which is majoring in religion.
Yeah. How funny is that?
It's pretty crazy.
It's natural to go from religion into finance, right?
Mine was a double major in religion and economics, and
Okay.
I joke that's because I pray that I can make some money once in a while. So that's my joke. But major in religion, and we're going to get into a whole bunch of stuff. But what I always like to do is have my guests do a little bit of an intro, whether it's anything I forgot or you want to let the audience know about yourself.
Yeah, I think that's basically it. To your point about trying to eventually make money as a religion major, that was my issue. Graduating, I hadn't really thought too long term about what I'm going to do with whatever it is that I'm studying. And the first thing you know is when you go to job fairs, there are no Fortune 500 religion companies recruiting. And so suddenly I found myself in a really tough spot because I didn't know what I was going to do for work because no one pays you to, read 1,000-year-old texts, and write papers about it.
Which is weird, though, because the number one book in the world is the Bible.
So
right? You would think that there'd be more jobs for religion majors.
You would think, but it's also on it's 8,000 edition, so it's like there's not a whole lot changing about it. But yeah, I actually thought I was going to get into nonprofit law initially, but again, the problem with that was, especially in Boston. So I went to Boston University. You're familiar. There's a lot of schools out there. The funny thing about trying to break into nonprofit law, as a non-lawyer, is that there's no jobs that pay anything.
Yeah.
Like even if you want to be like the secretary at like a nonprofit firm, they'll just take some 1L from like an Ivy League school that didn't get placed somewhere and put them there for free. Like they literally don't pay. There's no pay for any work there. But I was still interested in pursuing nonprofit law, and I ended up speaking with a recruiter for law firms about paralegal jobs, and just totally randomly, I got placed at a job in Midtown Manhattan at one of the big law firms that was representing sell-side analysts who had covered WorldCom and Enron, during those heady days of those stocks.
Yeah.
And through that process, I had this job for about 8 months. Through that process of getting exposure to that whole world for the first time, like I was never a finance, stock market, financial markets, even an econ guy, but I was just thrown into this world where people get information, they interview execs, and they put together research reports, and model numbers to come up with the valuation for a company.
Okay.
And I was reading about this entire process, and I always thought that this was some sort of wizardry, right? You had to have like a PhD in mathematics to be able to figure this stuff out. But I quickly realized, the math is actually, for a lot of asset valuation, is actually very straightforward. It's like, this is stuff you're learning in high school.
Yeah.
And then, of course, there's some statistics, but a lot of it's just storytelling.
Yeah.
And estimates and guesses you're making about people, right? Like
Interesting.
who's going to respond to, like, are you going to respond to the AT&T ad, or are you going to respond to the MCI WorldCom ad that has Michael Jordan in it?
Right.
And it's, you know, it's like, it was that kind of stuff. And so, you know, reading about how equity research was conducted just really fascinated me. And that's how I just sort of got thrown into the whole stock market world.
Yeah, that was going to be my question. How do you go from religion major to, I mean, besides the fact, I'm not just saying this because you're here, like one of my favorite people, brilliant, hilarious. We're going to talk about stand-up comedy later. So, but how do you go from, so you're a religion major, you just maybe found interest when you were placed in that job, and you said, this is really fascinating to me?
Yeah. So while I was at that job, I was also part of an intramural corporate dodgeball league. and this is like one of your classic sort of New York networking stories. And how magic
I'm picturing
there.
the movie Dodgeball right now, of course.
Yeah. So basically what happened was I'm at one of these games. It's like a Thursday night, and, you know, I get knocked out out of a game, and I'm on the sidelines. I'm just shooting shit with somebody.
Yeah.
And he was telling me about how he writes up stock picks for investment newsletters. And I was telling him I'm really interested in, you know, learning more about this.
Sure.
And so, you know, we get to talking, and, you know, we get drinks and dinner and all this stuff. And he's like telling me about like his whole path, how he wasn't really, you know, a finance person in school, but then landed at some random jobs and then enrolled in the CFA program, and then learned about, you know, finance through that sort of structured curriculum. And I found that fascinating too. And so I read into that a little bit, and that was actually sort of my introduction into portfolio management.
Okay.
Just really basic stuff, but understanding how risk management works in portfolio management was also something that was really interesting to me, because while I wasn't trying to fail out of school as a religion major, I probably spent 2/3 of my free time in school managing fantasy basketball teams.
Okay.
I don't think I've told you this story.
No, the truth comes out.
Yeah. I mean, you know, I think it all begins to make sense, you know, when you sort of, at least for me, when I review what my old hobbies were and like what I was always really interested in. And, you know, I always really liked fantasy basketball, because I found the more time I spent with it, the more I found, you know, ways to score extra points, and, you know, move ahead in this league that, you know, is always impossible to play. But, you know, managing a fantasy basketball team was basically structurally exactly like managing a stock portfolio.
Okay.
You know, you're trying to accumulate as many points as you can. And, you know, the rules dictate that you have to have, you know, a point guard and a shooting guard and a small forward and a center. And so with each of these different roles,
diversification,
yeah, you get points different kinds of ways. So it's like you might have a night where someone else in your league has like the best center, and you know that they're going to score, you know, 1,000, get 1,000 blocks, and so maybe you don't, you know, lean too much into that with your center, and like, you know, focus on some of the other positions and stuff like that. So, you know, risk management and, you know, diversification and undervalued stocks too, right? So like if you're looking at stat sheets all day long, it doesn't matter how big of a superstar someone is. You know, you can find someone who hasn't been drafted, who's some no name, but I forgot exactly what the language was, but like you look at the history of the matchups, like this shooting guard always gets 6 steals against this shooting guard, and no one is paying attention to this stat. But like just for that one night only, if you have this player and he's going against this player, you have to like put this person in, even though it's not going to be on SportsCenter.
Yeah.
It's someone who's probably going to be in the league for like 3 years, playing against another person who's been in the league for 3 years. But like, you know, you see those opportunities like that. And so, yeah, you can draw a lot of parallels to, you know, stock picking, the stock market, portfolio management. And it was like triggering all of those great parts of my brain that I like working when I read about stuff like portfolio management. That really got me into it. That's when I was like, that's it. This is the route I'm going to be taking. But yeah, I think you know, as much as the movies portray, you know, Wall Street guys to be, you know, cokeheads in suits, you know, talking gibberish all day long. You know, there's so much about it that's just like working out puzzles and, you know, storytelling.
Yeah. One of the things I know you're great at is shutting out the noise, because there's a lot of noise out there. And in fact, one of your slogans for TKer is news, data, and insights without the noise. So my question is, there is a lot out there, and it can be overwhelming. You wake up in the morning, there's 20 bloggers writing about this. Someone's saying buy gold. Someone's saying sell your stock. Someone's saying Dow 100,000. Someone's saying Dow 5,000. Hide under your bed. You know, like just all sorts of noise out there.
Yep.
How do you curate all that to make some sense out of all this?
Yeah, I mean, you know, I think as someone who worked at Yahoo Finance and Business Insider for so long, you know, you could say that I was probably part of the problem. But
I didn't say it; you said it.
No, I mean, you know, it's like it's all relative. It all has to do with perspective. But you know,
so you were the noise. Now you have to curate it.
Yeah, I mean, I'm not sure if I would quite characterize that as noise, but
I'm
yeah.
kidding,
What was happening though was, you know, while I was at both Business Insider and Yahoo Finance, I was also part of, you know, managing their newsletter operations.
Okay.
And something that you get to do with newsletters is you have to do some curation, and depending on how you want to position yourself against all the other finance newsletters that exist out there, then maybe you do something a little bit different. So, you know, for instance, at Yahoo Finance, you know, I was co-authoring the Morning Brief newsletter with Miles Udlin, where, you know, we would talk about the news, but we would try our best to try to contextualize, you know, what was going on, and you know, highlighting the main things that had that appeared to have more significant longer term implications for the markets and the economy, and therefore a person's long-term investment portfolio.
Yeah.
And in that process, we'd get a lot of feedback from readers saying, you know, this is really great, and I know that you have writers who write like this on your site. It's just incredibly difficult to get to all that stuff. And that kind of feedback was something I was getting since I was at Business Insider. And so, like, there seemed to be enough people repeating this that I thought, hey, maybe there is a way to just have something that's essentially news, but, you know, without the stuff that's just like this, you know, the day in and day out, you know, scandal that moves one particular stock that, you know, is going to have insignificant implications, you know, outside of just distracting you for a day.
Okay.
So, which is great, because in many senses, as a newsletter writer, I'm still in the news business, but I'm not losing sleep because I'm not missing every little, you know, bit of minutia that might get clicks, right?
Okay.
Yeah. And, you know, listen, I think that's also part of it is I'm, you know, deliberately, very intentionally writing for an investor class, right? People who are trying to absorb news and information in the context of how they think about their investments and their retirement savings and stuff like that, right?
Yeah.
I don't really think that's what you know, the traditional finance news business is about, right? The traditional finance news business is about news. Something is happening. Something is trending in search and social. That means there must be a lot of interest in this story that everyone's talking about, whether it's something super salacious or it's a penny stock that's, you know, up 1,000%. And people want to talk about it. And, you know, in that sense, you know, traditional finance news is a great service because it's, you know, delivering on a person's interests or their asks, but not necessarily their needs, right?
Okay.
You know, maybe by ignoring some of this stuff and focusing on the higher impact news stories or data points, it makes the reader feel better about what they're doing with their money. Like, I think that's basically the way I think about how I frame the newsletter and target the content that I'm doing.
Okay. And you bring up a great point about specific for investors, because a lot of times we talk about terms, but we forget to say trader versus investor.
Right.
So I'm more of a trader. You're trying to curate and produce content for investors. The problem I find is that whether you're a trader or an investor, we live in the most impatient world ever.
Absolutely.
Like everyone wants to do 10 sit-ups and have washboard abs. Like I just want to make $10 million in 2 days, and I'm not thinking longer term, even if they say they're an investor.
Yeah.
Do you find that even though your audience and you're trying to produce content for investors, do you find a lot of impatience and nervousness, even though they say I'm in it for the long run, but every little drop in the market creates some sort of stress or something like that?
Yeah, absolutely. And, that happens to me too. When I do see that market volatility, it gives me a lot of anxiety. I think actually, one of the newsletters I sent out a couple weeks ago was, I'm nervous too.
Yeah.
That was literally the subject
I
line
remember
of it.
seeing that, yeah.
Because that's just how our brains work. It's really that simple. We can't deny ourselves of how, the chemicals work in our bodies and flow through our veins. So I think, I think it helps my reader to communicate to them that I have all those same vulnerabilities, but this is how I'm dealing with it. And the way I've dealt with it historically, 90% of it is just like, going back to the data, seeing what the history says in terms of, the numbers when it comes to how people react, like what it is that may be moving markets at a given moment and how people might react to that, what the instinct might say, how you should react to that. Let's compare what that instinct is based off of the historical data. Like for instance, there was this really great stat that was put out by the Bespoke Investment Group.
Okay.
That compared two portfolios. I think this is over like a 50-year period, but they compared two portfolios. One that was only long the S&P 500 on days after positive moves in the market, and then another portfolio that was only long after negative days in the market.
Just long for 1 day, you mean?
For 1 day, yeah.
Okay.
And then you accumulate those gains over a 50-year period. And what they found was first of all, buy and hold through this entire period, is going to do extremely well. But the one that did extremely poorly was buying and hold or buying on the day after a positive day, right?
Okay.
So it's like the market is going up. I think that this is a great time to buy, but you might get some positive returns, but it's not necessarily going to carry your portfolio. You can't only buy when it feels good to buy, right?
Yeah.
The portfolio that blows that out of the water is the one where you buy the day after a negative day. So on Monday, the market's down 1%. Tuesday, you go long for that day.
Okay.
Thursday, it's down 2%. Friday, you go long that day. And it turns out that that's the portfolio that'll give you massive returns, because God knows why that happens. All we know is that it's a mistake to let your fears take over and convince you that you must sell after a bad day. And there's all different kinds of ways to slice this, but like Ryan Detrick is really great at sharing these stats, where it's like when you have certain kinds of streaks of negativity, the odds improve that you have positive returns certain periods out.
Sure.
So that's part of how I cope, with volatility myself. And when I feel like I need to be reflecting on that data, that's usually a good time to send a newsletter out to subscribers and say this is, because as it's one thing for my audience to be conscious of the fact that they want to think long term. They don't want to react on news. Just because they're conscious of that doesn't mean that they're not going to have these, feelings, these emotional reactions to, stuff that you do read in the paper. So yeah, I think it's great for me when there's a lot of market volatility because there's a lot to write about, especially in this context of how this usually works out for people who are thinking long term.
Yeah. What's the expression? The higher the VIX, the more the clicks.
The more the clicks. Yeah. It's funny. Like you said, it's the newsletter is branded as telling the story of how the stock market usually goes up.
Yeah.
The tragedy of all this is when it's going up, no one's interested in reading about the stock market because they're fine.
Yes.
Right. Like, if my 401k plan is increasing, day after day, week after week, I'm a genius. I don't need help.
Yeah. You're the best ever.
Right. So, but yeah, like it's during periods of volatility that the engagement goes up and the subscriptions go up.
Yeah. Financial television's ratings are the highest during crashes.
Yeah.
When it's straight up, it's sunshine and rainbows and no one cares. No one cares. No one's watching or the ratings are lower because I use the Weather Channel analogy. You don't turn on the Weather Channel when it's 75 degrees and sunny outside. You turn it on when a hurricane, tornado, or blizzard's coming.
Right.
So it's no different than, remember the old days like Tom Brokaw, Peter Jennings, like CBS, NBC Evening News?
Right.
They would talk about the news of the day, but they would never start the news with the stock market unless it's in today's news, the Dow dropped whatever number of points.
Right.
So they only start the evening news with the stock market after a big down day.
Right.
Never like everything's at new highs today. Let's start the news and I don't know, do you think that's because fear sells or because a little bit of, to your point, like people just when things are dropping, they get a little bit nervous?
I mean, I hate to frame it as fear sells. Like fear does sell.
No, if I write a blog post, Dow 100,000 or Dow 5,000.
Yeah.
I know the Dow 5,000, just the title, will get infinite times more hits than the positive one. But
yeah, I think it's as simple as that's when people are asking questions. And when you're a provider of information, which the news is supposed to be, then that's your opportunity to provide information. Like it's the craziest thing if it is that the Dow is down 5,000 points and you don't start the evening news with that. Like, what does that mean?
Yes.
Right. Like unless every other channel doesn't cover it, then maybe you're not supposed to be paying attention to this. But what happens on those nights? Like this is something that does happen in the news business, and producers behind the scenes, go nuts about this. Is when they're the one channel that didn't cover a particular story that everyone's interested. Because then the audience is left, they go to work the next day and they're at the water cooler or, they go to church or some social engagement and they're the one person in the group that is behind on a story because ABC didn't cover it that night or CBS didn't cover it that night or Fox didn't cover it that night.
Right.
You don't want to get caught as a news person. You don't want to have your audience get caught not knowing something because you chose not to pick that story that night. So media is a business, right? Especially at that scale. I can get away with what I'm doing because I'm not trying to reach 100 million people. I'm only interested in reaching however many people who are interested in my particular angle. And that might be 1 million people, that might be 50,000 people. I don't know what it is, but it's not mass media. But when you're at that level, when you're on cable, when you're competing for 100 million, finance news eyes, you can't ignore whatever might be the biggest story in social media because you think that the stakes are too low. Like, there's always going to be, some senior person in that newsroom, whether it's the audience development head or the corporate person who comes down on the elevator and asks the EIC, why aren't you covering this story? And, no amount of, I think this is a low impact story is going to compete with a chart that says, there's 200 million likes on a tweet from some asshole about nothing.
Yeah.
Where we have to talk about this. So, that's sort of the trade-off that comes with being in that business is, sometimes the audience forces you to cover a story that doesn't matter.
Yeah, I guess give what the audience want, give them what they want, so to speak. Or?
Yeah, I think so. I think Jason Zweig had a quote from his father that was something along those lines where, God, I'm going to screw this up, but it was something along the lines of lie to people who want to be lied to, and you'll make a living. Tell the truth to people who want to be lied to, and you're going to go broke.
Okay, that's interesting. I didn't hear that. I've never heard that one.
Yeah, it was like a scathing indictment of how media can work, and this is coming from Jason Zweig's father. So this is something that's been going on, since the beginning of news.
Yeah, yeah. You mentioned some stats with buying after up day or down day. Also, I know you some of your other interesting stats about the percentage of times the market's up every day versus every year versus every longer term period.
Yeah.
Can you talk a little bit about that?
Yeah, sure. So I'm not going to have the precise numbers, but basically what the history tells you is on a given day, the stock market closes up like 51, 52% of the time. It's about as close to a coin flip as it gets.
On per day?
Per day, yeah.
Okay.
As you extend that out, like if you extend that out to a month or 3 months, that percentage quickly increases to 70, 75%. And, you add it a year or whatever, it becomes 80%. And then, it tapers out a little bit, but over a 20-year period, there's never been a 20-year period where the stock market was down. And, this speaks to, things about, why you need to wait and hold long term and buy hold and all that stuff that everybody always talks about. But what I think is most fascinating is I think that actually tells us a lot about how the news works, right? Even the thing is, when you're in news, you have to cover, especially if you're in financial markets, is you have to cover financial markets every day. And so if you're covering on a daily basis, then the statistics are telling you that close to half the time you're reporting on why the stock market being down, right? So it might create this bias, this sort of illusion that maybe it is a coin flip, being in the market, and depending on the kind of strategy or your time horizon or whatever your approach, the nature of that risk changes. But if you are a person with 30 years until retirement, but you turn the TV on every day and it looks like a coin flip, and it looks like it's up one day, it's down the next day, then if it might feel like you're going sideways, and it might feel like you need to seek something, a better alternative to this, because this might not work out. But again, that's the historical data. The historical data says that's what happens on a one-day basis. Of course, the percentage gains to the upside tend to be better than the percent. Well, not even just the percentage gains, but like the dollar gains on the upside tend to be better than the dollar gains on the downside. So, which is why it tends to compound and accumulate positively over time. But I do think stats like that are really fascinating, because it helps us understand why it feels like news is so bad all the time. Because even during calm periods and calm days or calm weeks in the market, almost half the time you're going to have a down day in the stock market. Yeah. And what's your job as a person on air is, why is the market down today?
Explaining the reasoning.
Yeah.
Explain the reason why it's down.
Exactly. Because again, that's what the audience is asking. We want to know what's going on. And you can't tell me that, we don't know, which oftentimes might actually be the answer. But you can always back into something. The 20th largest company, in the market had missed earnings by a penny. Maybe people are worried about the outlook for the economy. Yeah.
When you and I know that's kind of not bullshit, it's just forcing a reason. Yeah. Oh, the market's down. Let's see what the news is to see why, or the market's up. Because you talk about, every day, but even intraday, I've seen some weird stuff. I'll give you an example. The jobs report comes out first Friday of every month. So it comes out, and I remember one time the Dow's down 200 points in the morning. And the headline was, market down because of jobs report. Yep. Then later that day, it comes all the way back and finishes positive, and the same news outlet says, market's up because of jobs report. Yeah. So I'm like, that's why sometimes it's not only a lot of noise, but it's also, I feel like, because to your point, if it's on a day-to-day basis up and down, but your job is to report why, because people like you said, want to know why.
Right.
So why is it down is more of an interest than why is it up? Because if it's up, okay, everything, again, it's 75 and sunny out.
Yeah.
But it's really interesting how even like the need to justify every move in the market can really create a lot of like just noise for people.
Yeah, and it also makes your own media company look bad. My one of my mentors at Business Insider, Joe Weisenthal,
Yeah, love Joe.
was very serious about how we would frame those headlines. There was a lot of stuff that we did that was really cool when it came to experimenting with the storytelling and the headlines.
Yeah.
But one thing that he was always very disciplined about, and he made sure everybody understood this, was we have to be careful about establishing causality when it comes to one-day market moves, right? Like we can have a headline that said, stock market falls after the May jobs report,
Yeah.
or falls after low unemployment, which is fine because you're establishing just sort of the sequence of events, and you try to communicate that in the article too. It's like this is the news that happened, but this is what happened in the market afterwards. We're not gonna try to say it's because, like, sometimes it might actually be because, like, if it's a shockingly bad number and the market's bad and like it makes intuitive sense, then maybe sometimes make those connections. But because of exactly this issue, because the market will turn on a dime for apparently no reason, you find yourself having to re-edit these headlines and then having to re-explain things in your articles, and suddenly you're backtracking on things that you communicated that morning. Whereas if you report it, straight as a sequence of events, the sequence of events never changes, right? Like that, you can't. That's not. There's no misinterpreting that.
Yeah.
And then at the end of the day, if it's up or down, God knows what happens. But we're just trying to report the facts here. But when you establish causality based off of assumptions, then now you're filling in gaps here. Now you're suddenly not just a reporter, but you're an analyst. And so you have to be really careful about how you write those things, because it is easy to just get lazy and say because of this, because of that, when sometimes you can't necessarily make those connections.
Yeah, and also to be fair, I mean, you want to continue to develop an audience and gain readers, because I remember when you were at Yahoo Finance and I would, you guys were kind enough to let me contribute some articles. When I titled them, it sucked so bad that I would stop sending articles with titles, and then you would come back with, what do you think about this, with 2 or 3, and I was like, these are great. Like there's an art, not only just super creative, but it was like there's an art to the headlines and titling articles as well.
Yeah, and I think that's one of the more challenging things when it comes to, especially when you're writing about financial markets and the economy and trading and all this stuff, because there could be a lot of jargon and there could be stuff that people miss in the headline. And so something that was always very important, especially back in the Business Insider days, was we absolutely did not want to create clickbait.
Okay.
Like that's I want to make that really clear. Like, I'm not saying that clickbait doesn't exist. I'm not saying that.
Oh, and I'm not saying that you were. I'm just saying. But go ahead. Sorry.
But no, the point being that it was very important for us to have like a very blunt, very a headline that signaled something you're going to get out of this article.
Okay.
Or signaled a sense of urgency. If there was a sense of urgency to be had. If you don't have a sense of urgency, then you don't want to have a high sense of urgency communicated in that headline. But something about that headline had to reflect sort of the vibe and the energy of the article. And that's something that, you don't get when you open The Economist, for instance.
Right. No, that's what I'm saying. There's an art to that.
Yeah, it's absolutely an art, because there's an extremely fine line between doing that well and then having that clickbait article where you have something outrageous in the headline and you click in and the story doesn't deliver on it at all.
Yeah.
Right. And that's really important also in the media business, because, as much as we talk about these high clicking articles and high clicking news stories, if you're not able to deliver on whatever that headline is, then you're going to break trust with that audience, and you can't build a business that way. Like the only way you're going to actually build a business is by building an audience, and you have to develop trust. You earn that trust, and you maintain that trust.
Okay.
And so that's sort of the tricky thing about having really blunt, aggressive headlines is if you go too far with this, then you're going to lose credibility with your audience, and they'll leave and they'll go somewhere else, and your numbers decline. But if you do this well on a consistent basis, then you can have something like a Business Insider Markets or a Yahoo Finance where the numbers, hold up for a very long time.
Yeah. Before I forget, I wanted to talk about you're a CFA charter holder. That's not an easy exam, and it's 3 levels for the CFA?
Yeah, 3 levels.
Can you talk a little bit about that? Because I know some of the audience members are CFAs or might be interested in getting into finance, and I never got mine because I've just heard it's maybe too intimidated. But talk a little bit about that and how that's helped you in your analysis with your writing and curating and everything.
Yeah, I mean, I think the first thing is if people are asking, then my recommendation is probably don't go down that road.
Okay, that's fair.
I sometimes joke that this part I don't joke. I have no regrets having done it. It's gotten me into through a lot of doors that I wouldn't have been able to get through if it weren't for the program. And every couple of weeks, something happens in the news or in the data where I know that I have an advantage because this is a topic I covered in the CFA curriculum. That said, my joke is if I had an actual physical time machine, I would go back to when I started this and say, don't do this.
Okay, that's fair.
Because it quite literally took up a 4-year block of my 20s that I have no other memories except going home from work and studying for another 3 or 4 hours to, for this test that at the time was only administered once a year. And if you failed in a given year, you had to wait a year to take it again.
I remember hearing that. Yeah.
So,
it's a lot of stress.
It's a lot of stress. It's incredibly challenging. And the pass rates, they publish it all the time that it's like 50% for each level at any given year, close to 50%, which is particularly scary when you realize that, the incredibly ambitious people all around the world are pursuing this for the sake of passing, right? And especially when you talk about the latter levels, 50% pass rate for level 2 and 3, that's, it's kind of misleading. It's actually much worse than that because these are 50% pass rates from people who passed level 1 that was already difficult to pass.
So compounded.
It's compounded, yeah. So it's actually a shrinking number of people throughout the entire program. But I found it extremely beneficial because I didn't study finance in any sort of structured way in school. And a lot of places talk about how you can accumulate a lot of this knowledge, on the job, through on-job training or classes you can take along the way, which is true. And you can get everything, if not more, through just experience. And, if you come across a topic that doesn't make sense, you can...
Or just Google it.
Yeah, you can Google it. You can find it on Investopedia. ChatGPT does a pretty good job of giving you a good answer here. But if you're looking to get ahead of having to Google that, it's a decent way to commit, 3 years. And statistically, I think the average CFA charter holder takes either 4 or 5 years because you pass at least one level once at one point or another. But yeah, it's incredibly grueling. And, if you're working full time while taking this test, which is the case for most of these test takers, that means you go to work from 9 to 5 or whatever your hours are, and then you get home, you make dinner, and then from 7 to 10, you're going through, a chapter of this, 18-volume textbook series.
That sounds like torture.
It's absolute hell. It's absolute hell. But at the same time, it can be really rewarding. I mean, so I took the CFA exams from 2006 to 2010,
Okay.
which is very, I think, fortunate how the timing worked, because I was taking level 2 as the financial crisis as the
Yeah.
world was spiraling into financial crisis,
Yeah.
and something that was in the level 2 curriculum, very heavily at the time, was fixed income securities and mortgage-backed securities, and even how to
Oh.
structure a CDO. I didn't imagine I would have to ever use this information. It was so difficult to study it at the time because it wasn't in the news.
Yeah.
But you're looking at these payout models and like all the risk tranching, and then you take something that's been tranched and you put it into another security and you tranche it again. Like none of these, this is all like Greek foreign language to me. And like, as a person who mostly writes about stocks for retail investors, sophisticated fixed income securities that are traded between institutions, doesn't make any sense, and is like, you think it's not worth your time,
Right.
until you have a financial crisis
Where everyone's talking about CDOs and everything.
Yeah, where everyone's talking
mortgage back. Everything.
Yeah, and then value at risk models, was really big back then. I forget exactly how it works, but the idea that you can model, a worst case scenario to like the 95th percentile of, scenarios or whatever, and beyond that 95th percentile, you get into a dark area where we don't exactly know what happens here, but it looks bad.
Yeah.
And studying that at through textbooks from the people who actually built these things, and then reading about it in the news, you start to understand how these vulnerabilities can really snowball into something very bad.
Yeah.
Which is great. I think that's something that's the difference between. I mean, look, I don't know how this stuff is taught to the people who are selling them.
Yeah.
The securities, the brokers or whatever. But when you're taught in the CFA program, they tell you this is why you make money, but these are all the risks, and these are all the downsides.
Yeah.
So yeah, in that sense, I think the program is really great, but I think it is really for people who want to pursue this in a professional way.
Okay. You've covered investor psychology a lot in your writing, because that is, I've always said, I think 80% of the market is psychology, even for the long-term people who know the stats show after over 10, 20, 30 years, the market goes up. When we're in a decline, when there's a financial crisis, it's recency bias, and the news can be horrifying, and people, start to get really scared, emotional, nervous, whatever the word is. And you had a great article about it's okay to have emotions, just don't let them near your stock portfolio. Can you talk a little bit about that? Because I love investor psychology. I could talk about this all day.
Yeah. It was basically sort of a first person telling of how I was reacting to the market sell off. And the funny thing is, I sent that out in March. So we're not even talking about like the Liberation Day, crash
Yeah.
yet. But it was like, just run of the mill market volatility. But yeah, it was very upsetting. But again, it was one of those instances where I think if you have these feelings, you shouldn't feel like, well, gosh, I suck at this, or maybe those feelings are telling me something that I don't know, or whatever. No, it's just, this is just part of how this works. Like the most accomplished seasoned professionals are wrestling with the same exact stuff. But again, we have to repeat to ourselves, here's the data, and here, because that's the thing, most of the stuff that I publish in the context of market volatility and market routes and sell-offs, always involve, stats like we were just talking about.
Yeah.
How like there are these, in an average up year, you have these big drawdowns.
Yeah.
Or over short periods of times, the odds of positive return, are relatively low relative to when you extend those time horizons, and you just have to keep repeating it.
Yeah.
I think this actually ties back to the whole religion thing too, by the
Okay.
way, and how the most popular book that's ever been sold is the Bible or whatever. I grew up in Louisville, Kentucky, in a religious household. We went to church every Sunday, And anyone who's affiliated with any religious group knows once a week you go somewhere and someone's teaching lessons from very old texts.
Yeah.
And most of the time when you listen to that lesson, they are reciting the same scripture or the same scrolls or the same verses that you probably heard 50 times at some point. Like, how many times are they going to tell, the Noah's Ark story? Or how many times are they going to tell the story about, David versus Goliath? But it's like the story gets told over and over and over and over and over again because people need to hear it.
Yes.
Right. And I think that's the same thing with investing and financial markets. Maybe in the news business, it's difficult to repeat the same thing over and over because maybe it's not fresh. But when I get to write about it, I do have the luxury of being able to repeat the same thing over and over and over again because it's actually just the same lesson that needs to be repeated again. Yeah. And you know what? Like 18%, 19% drawdown we had this year. In the moment, it feels like, well, this is the end of the world. Or like there's all these reasons why this is terrible. But like,
it's actually pretty average.
It's pretty average. And people like Warren Buffett will go through the entire history of, political turmoil and regulatory changes. And, we even have a history with pandemics and we have history with political turmoil and we even have a history with tariffs. And there's all kinds of things that we can draw on that tell us, well, yeah, of course, things look bad. But like, even someone like Warren Buffett, who fortunately has actually lived through all of this.
Yeah.
Right. We hear this a lot of times in finance that most people have never lived through a rising rate environment, or most people on Wall Street have never lived through an extended bear market or whatever. But then the person who's giving some of the greatest wisdom has, lived through 60 years of this and is like telling us point blank that, well, yeah, sure, things can turn terrible for a little bit, but like, we usually figure it out.
Yeah. The thing you keep pointing to is you were kind enough to bring me a gift, C's Candies, which Warren Buffett owns.
Warren Buffett owns, yeah.
Yeah. So I do want to talk a few things about Warren Buffett. So this is you can only get from Omaha.
Yeah, you can only get that at the shareholder meeting.
Yeah, there we go. Okay.
So yeah,
I'm gonna eat this whole package while you're talking.
Oh yeah, it's great. You might actually. But yeah, he puts on quite a show.
A couple things I wanted. So while you're talking about the news and stuff, there's a couple things because I do want your insight on Warren Buffett, having covered and been many times to the Berkshire Hathaway shareholder meeting. He has so many great quotes. One of my favorite ones is, when you mix your politics with your investing, you're making a big mistake. To the point about, if the market is dropping and it's because of who's president or something, a measure the Congress took or whatever, a lot of people get very, very emotional about that and start to blame this, or because of, I hate this president or I hate this administration, I'm not going to invest or whatever. And I think he's right. It's a huge mistake, because I've seen great markets under Democratic presidents. I've seen great markets under Republican. I've seen crashes under both too.
Yep.
So, but it's hard for people who we're so divisive, and it's so hard for people to separate those two.
Yeah. Because and you can't blame people for feeling that way, because in the moment it's scary.
Yeah.
Right. Especially when, you have administrations advancing, not just economic policies, but social policies that might conflict with
what?
Your
beliefs.
With your beliefs,
Yeah.
With your family's beliefs, stuff that might affect your friends and people who are close to you. And yeah, I think it's totally healthy to, have some outrage there and, have an argument with your family at Thanksgiving and all this stuff. But, you have to be really careful about how it's going to inform, your investment strategy, or do you actually make big changes to how you think about your long-term finances? I don't know, maybe you do think about, changing careers or jobs because you think, the tide is going in a certain kind of direction. But with investing, maybe at the sector level or the industry level, you make tactical tweaks or whatever. But in terms of like the broad economic narrative, um, as well as like a broadly diversified portfolio of stocks or whatever, um, you know, I hate to keep repeating it this way, but it's like the history usually says it tends to work out. But when you really think about it, it makes sense,
Yeah.
right? Because let's say someone does get voted in and puts in all these horrific economic policies, and you can draw a straight line to this decision and the unemployment rate going up 5%.
Okay.
Or you can draw a straight line between, this administration and, something extremely bad happening, 2 years down the road or something. Well, fortunately, we have a system that is pretty good at self-correcting, right?
Yeah.
For better or worse, you have a bad couple of years, you get voted out and your entire party gets voted out. And then, maybe the pendulum swings too far in the other direction. You have all kinds of other bad stuff happening. But it does self-correct.
So it's not just checks and balances within the three branches
Yeah.
of government. It's almost like checks and balances with the markets.
Yeah, I mean, I think short-term checks and balances within the government should work, but lately it's we can say whatever we want about more recently or like when all the three branches of government are sliding in a certain kind of direction. But yeah, I think it does work in the markets as well, and through economic feedback too.
Yeah.
Like every once in a while, you hear something like, it's the economy, stupid.
Yeah.
Or there will be stats that, where you can tie whether or not, an incumbent gets reelected based off of, the 3 or 6 month stock market performance going into election day, right? People, as much as it seems like people might be voting in conflict with their economic interests, eventually they do come around to realizing if they may or may not have made a mistake. So I think that might help us understand, why you don't want to get too caught up with politics.
Yeah.
You definitely want to be familiar with what's going on when it comes to policy, and it helps you understand why the market might be doing poorly, or why we might see empty shelves at the end of the summer, or why you're only going to be able to get $2 for Christmas instead of 30, right? Like understanding that definitely helps, but like investing, you have to take a long-term, bigger picture view of things instead of that. Like if it's an individual business, and maybe you get concerned about how the financial distress or whatever. But from an economy, a bird's eye view of the economy or the stock market, I don't know. I mean, again, I just look back at 3 or 4 years ago where we literally had the entire half of the economy shut down, and yet we managed to figure out a way to work our way out of this. You can't help but be somewhat optimistic about things, no matter how bad things actually get. Again, someone like Warren Buffett, who is 94 years old and has witnessed all this stuff and has been engaged in all this stuff for like 80 years.
Yeah.
Has an edge because he's lived through the Cuban Missile Crisis.
Yeah.
And the assassination of a president. I mean, can you imagine, in the moment, what things must have felt like during those times?
It's that longer term chart that shows that the market goes straight up, and it's all marked up and annotated with every major event that's happened through there. So it's World War I and World War II and presidential assassinations and 9/11, and it's just like through the whole thing.
Yeah.
They at the time they really freak people out, but when you look at the longer term, it's just a pretty smooth line. But when you're in it and the emotions are involved and you're losing money and the drops, it's not a smooth line.
Yeah.
But Buffett's lived through all that. If you can talk a little bit about how you got to going to Omaha to cover a lot of that and any of the insights. I know this could be a whole podcast talking about Buffett, but I'd love to get your color on that.
Yeah, I think for like the first half of my career, I remember we would cover the annual meeting through, tweets that reporters would have from the meeting.
Okay.
And, you just get bits and pieces, and then you cobble together what Reuters said and what the Financial Times said and what the Wall Street Journal said, and you have like a paragraph's worth of stuff.
Okay.
It's like, it sounded like it was pretty interesting, and there's a couple of photos of Warren Buffett on a big screen. But all that basically changed in 2016 when Yahoo Finance got a deal to live stream the whole meeting for the first time. So I was at Yahoo Finance from 2016 to 2021, and my boss Andy Serwer at the time struck a deal.
Andy's great. By the way, I love Andy.
He's incredibly he's a great guy.
Yeah,
and very savvy and very smart. We had a deal out of nowhere. This meeting feels like kind of a behind the scenes closed door thing, and then suddenly it's being live streamed to a couple million people.
And then you get lucky enough to travel there to cover it.
Yeah, and with the behind the scenes, the backstage tickets, the staff passes, and all that stuff.
Oh, you had the laminate and everything.
I had the laminate.
I'm with the band.
You get to cut the line. I mean, like if anyone's been to one of these meetings, it's like there's 40,000 people waiting since like 4 a.m. to get into the building.
Oh, I've heard.
But yeah,
it's like the new Batman movie. They're just lined out the theater for a week.
Yeah, people are nuts about it and
dressed as Batman.
Yeah, exactly. They're all dressed as Warren Buffett, with like a vest and But yeah, no, it was really cool to be able to send that out to the audience. To everyone who's ever wanted to get a sense of this, who's never been able to go, which by the way, it's not easy to get there during the meeting, right? It's like Omaha, Nebraska, you'd think it's a cheap plane ticket under normal times, but it's like, oh, you want to go during the meeting? It's like, you're paying like $900 from wherever you're flying from to stay at a hotel for $900 a night. Like,
how far is it from the nearest airport there? I know sometimes when people talk about going to Nebraska football, it's like, is it like an hour?
Yeah, no. Omaha, downtown Omaha and the Chi Center where they hold it is like about 12 minutes from the airport.
Okay,
yeah.
Okay.
And there's actually a decent number of hotels in the area. And, really the hack for people who want to save money when they go down there is not to stay in Nebraska, but you cross the river into Iowa and stay in Council Bluffs.
Okay.
Because there's like 6 different casinos there. And you get the casino rate.
Okay.
Right? And so it's possible to fly out there. And you're like 10 minutes away from the meeting and you stay at the Harrah's.
Oh, perfect.
For like $200 a night. And
great tip there.
And a great nightlife scene there too.
You got to get Harris to sponsor this episode.
Yeah. If you're listening. But yeah, it's an extraordinary event. It's incredibly, I feel really embarrassed to compare it this way. But it's the difference between, listening to CD and going to a live show.
I know it's actually a very fair analogy.
Yeah. I mean, because it's not even just about, listening to what he says on this stage, which, now everyone gets, for free. But you're in a place with like-minded, long-term buy-hold investors. And you bump into random people, just random strangers who look like normal Midwesterners, and they'll tell you something crazy like, oh yeah, I've been coming to this thing for about 30 years. My father bought a couple of A shares in 1975. Wow. And it's like, you just start doing the math in your head and you realize you're surrounded by people with like, 8-9-figure net worths, and they're just sort of quietly existing like everybody else. But yeah, it's a real scene. And then they have these shopping events where it's like,
it's like a convention, or like
crazy.
What's a festival almost.
Yeah.
I've heard that. Have you had any personal like interactions with them, or just any conversations or anything? Or
no, unfortunately, no.
Okay.
But I've heard enough.
We'll make up something. No,
I'll make up something. I mean, Andy's had Andy Serwer has done multiple interviews.
Interviews.
Yeah, and we've talked about questions to ask and stuff, and there's always been some interesting stuff that's come out of some of those conversations. Like he's almost said everything that you can possibly imagine that or answered every question that that can ever be asked of him. There's actually a book that just got published. I think it's called like Buffett and Munger Unscripted, or something. This guy, Alex Morris, is the author or the editor. Basically, went through like 30 or 40 years of transcripts from every shareholder meeting, and then broke it up into sections so that you can basically, what does Buffett think about Democrats or whatever, and like this whole like section where you can read about everything he's ever said about them. So yeah, I think he's been thoroughly covered, and I don't think there's anything I can ask him that hasn't already been asked.
Okay. On a personal note, have you ever done stand-up comedy, or have you ever thought about it?
No.
No and no?
No and
no to both questions?
I guess everyone's probably thought about it at one point or another, but
the reason I ask is because I wasn't kidding earlier. You're one of my favorite. Like I think the first time I met you, I'm like, I crack up at your tweets. I like understand the sarcasm because that's hard to get through on social media.
Yeah.
Absolutely love. And my brother used to do stand-up comedy, so I really appreciate the humor. And I'm like, this guy could do stand-up comedy. So that's why I was wondering if you ever have or ever thought about it.
Yeah, well, first of all, I've never been someone to do things live at all. So like even taping a podcast was not something I did before like 2021, basically.
Okay. Well, thank you for doing this. Then.
Yeah, it's my pleasure. Thanks for having me on. I don't think I'm particularly great at this. I think there are people who are much better at speaking to an audience.
It's all about storytelling. You're a great storyteller.
Yeah.
Like Chappelle and Tom Segura and some of my favorite comedians, they're just great storytellers. So that's what, they just with stand-up, whether it's podcasts or especially with stand-up comedy, they just find a way to twist some humor into it. But you're a great storyteller.
I think I would like to try it at some point, only because I have huge respect for people who are sort of climbing the ranks of stand-up.
Yeah.
Because it takes a lot of freaking heart to be up there.
Oh, yeah.
To put yourself out to the world or even, a very small audience. And
be funny.
And be able to bomb and just plow through and then come back the next night and then do it again and again and again until you figure out how to make it work. I have huge respect for people who are successful at it, but who also struggle through it because, man, that is not easy.
No.
But I don't know if I mentioned this earlier, but my father is a Southern Baptist minister.
I remember you told me that. You did not mention that, but I remember you told me that like a while back.
And he's very concerned with public speaking skills. I mean, that's his forte. That's his like he goes up there, he's in front of 200 people, and it just turns into magic. And people just like latch on
to give a weekly sermon.
Weekly sermon, yeah.
Okay.
And he's retired now, but growing up, I remember every once in a while I'm just hanging out at the church because that's what you do sometimes when your dad's a minister. And like sometimes like I would just be sitting around and I'm like complaining about being bored or whatever. And so I remember there was one day where he pulled off like an old text from a shelf in his office, and it was like the writings of Thomas Jefferson or something insane like that. And we go into the sanctuary, and he walks me up to the pulpit. He sets up a camera, an old VHS camera. This is like 1996.
Yeah.
And he says, "You're going to read, 3 chapters of this, and we're going to record it, and then we're going to go back and we're going to, scrutinize your public speaking ability." I just absolutely hated this whole thing. I didn't know why I was doing this or
no
what.
audience, just in front of a camera.
Just in front of a camera,
Okay.
empty pews. And I remember feeling so silly about this, and like, but it's not until like 8-10 years later, some people have decided to tell me that I'm pretty good at storytelling, or if pretty good at explaining something in a certain kind of way where people aren't falling asleep. And I have to thank my dad for going up every Sunday and basically teaching me how to speak to strangers.
That's cool. It's a gift.
Yeah. But I don't know. Have you ever done stand up?
No, I've been to a million shows. I used to write some or try to write material when my brother, he did like amateur open mic stuff and, but never performed. No. When I do financial talks, I try to implement some jokes in there, like if a chart has a big, huge bottom, I just call it a Kardashian bottom just to see if the audience is listening and just stupid stuff like that, but never like Comedy Cellar or, the Comedy Store, no open mic, but I would like to try it.
Yeah.
So that's why I was curious if you've ever done that. But.
Yeah. No, I mean, it's so far on the bottom of my list for no other reason than it absolutely the idea terrifies.
Well, that's the number one fear.
Yeah.
When you survey people, number one fear is public speaking. That's why I agree with you. I agree that it's not just to speak in front of people, but to also be funny. I agree that I have tons of respect for, I think it's one of the hardest jobs in the world to be a stand-up comic.
Yeah.
Because you're overcoming the number one fear and you have to be funny and keep an audience engaged for an hour Netflix special, or back in the days, an hour HBO and George Carlin and all these Robin Williams would do these hour specials. Like, that's what I grew up watching and I'm in awe of it.
Yeah. And reading the audience too.
Yes.
Right? Because you can't, like, you can nail it, in, the Comedy Cellar or whatever, somewhere in New York.
Yeah.
But it's like the audience is going to be completely different in Las Vegas.
Oh,
or different size rooms and, different regions and all that stuff.
I knew a Boston comedian. He's like heavy Boston accent. And he's like, I can't take my act outside of 128. And Route 128 was like the circular, highway in Boston, because he goes to California and it's like, what are you retarded? He's like, this stuff doesn't work with the heavy. I went to Harvard, it does that heavy Boston accent.
Yeah.
Like it does. He's like, I can't take my act outside of Boston.
Yeah.
So it's true about reading different audiences. Well, I could talk to you all day about this stuff, and I thoroughly enjoy when we have our conversations. But I kind of want to give you the last word. I don't know if you want to, any sort of lessons that you could, if someone wants to get into journalism, or even life lessons, or obviously from the, spiritual background, I'm sure there's an insane amount of insight. But if you, I'll let you close out with a few words, whatever you want to.
Yeah. I mean, I think, first of all, thanks for having me on.
I can't thank you enough for being here.
Yeah.
This is always fun when we get to catch up.
Yeah. And, it's funny, like every once in a while I'll mention to someone that I'm going out to Vegas to, gamble with my friends or something. And it's like, that's always hit or miss. And then, I don't know exactly how I first heard, but when I learned that you were out here in Vegas, it was like, I gotta see Joe.
Yeah, no, when I'm here, I'm not here all the time, but when I'm here, I try to record as many podcasts as I can. So I try to take advantage when people are going to be in town.
Yeah, you're doing great. Well, this looks great.
Oh, thank you. My producer, Tyus, is awesome. He's one of the best in the business, and he makes this magic work.
Yeah. Well,
shout out to Tyus.
Keep at it. And
thank you.
I mean, I don't know if I have any wisdom to impart on people. I can only speak for myself. In that, I think being curious and being open to things has gotten me a lot of unexpected opportunities. I would have never imagined myself writing about the stock market ever, but, like I said, I had hobbies that, challenged certain parts of my mind that I enjoyed, and I was able to realize I can apply that same skill set and those, needs, in a certain field that I didn't realize, was really like this. So, if you have things you're interested in, give it your all and pursue it. And meanwhile, be open to talking to people about what they do, because, you know, maybe one day you realize you're in the wrong job or you're in the wrong industry, and suddenly you're going to be killing it somewhere else. Because, you know, again, I grew up in a church and was going to get into nonprofit law after being a religion major.
Yeah.
And
Look at where you are now.
And now people are subscribing to my stock market newsletter.
It's an amazing journey, and I hope we can continue to discuss it and follow it during the journey. Thank you for being an amazing friend. Thank you for, if you bring me candy, I'm going to love you anyway. So thank you for sharing your insights, and hopefully we can do this again soon and continue to follow your journey.
I'm all about it.
All right. Thanks again, my friend.
Thanks for having me.
Sure.